Now speaking, Mike Comilla, Vice President, Investor Relations. Good morning and thank you for joining us. Robert Ford, Chairman and Chief Executive Officer, and Bob Funk, Executive Vice President, Finance, and Chief Financial Officer, are here to provide opening remarks. Abbott is expecting strong financial results for 2023, with organic sales growth and other non-GAAP financial measures. However, there are risks and uncertainties that may cause actual results to differ from those indicated in the forward statements. Abbott has provided non-GAAP financial measures to help investors understand its ongoing business performance. These non-GAAP financial measures are reconciled with comparable GAAP financial measures in the earnings news release and regulatory filings from today, which are available on the company's website. Unless otherwise noted, commentary on sales growth refers to organic sales growth, which is defined in the quarterly results press release issued earlier today. Now speaking, Robert Ford, Chairman and Chief Executive Officer. Good morning everyone, and thank you for joining us. We are pleased to report that our second quarter adjusted earnings per share was $1.08, which reflects an acceleration in the contribution from the underlying base business. Our organic sales, excluding COVID testing, increased low double digits for the second quarter in a row, driven by mid-teens growth in medical devices, double-digit growth in established pharmaceuticals and nutrition, and 7% growth in diagnostics. We are seeing improving underlying demand trends across our businesses, both in our institutional and consumer-facing businesses. In nutrition, sales increased 10%, led by pediatric nutrition growth of more than 20% in the US and 6% growth internationally. Established pharmaceuticals sales increased 12.5%, driven by growth across several markets and therapeutic areas. Diagnostics, excluding COVID testing, grew 7%, led by core lab diagnostics, where sales grew 10%. Medical devices sales grew more than 14%, including double-digit growth in both US and internationally. We received US FDA approval for our TactiFlex ablation catheter and our Avere dual-chamber leadless pacemaker, and we submitted for FDA approval for our TriClip minimally invasive tricuspid valve repair device. We also launched Eterna, our first rechargeable neurostimulation device for pain management. Our pipeline continues to be highly productive, which will sustain our strong growth profile in the future. Now speaking, Bob Funk, Executive Vice President, Finance, and Chief Financial Officer. Our second quarter results showed a 9.2% decrease in sales on an organic basis due to a year-over-year decline in COVID testing-related sales. Excluding COVID testing-related sales, underlying base business organic sales growth was 11.5%. Foreign exchange had an unfavorable year-over-year impact of 2.5% on second quarter sales. The adjusted gross margin ratio was 55.4% of sales, adjusted R&D was 6.4% of sales, and adjusted SG&A was 27.2% of sales in the second quarter. Our second quarter adjusted tax rate was 14%. For the full year, we now forecast total underlying base business organic sales growth, excluding COVID testing sales, to be in the low double digits. We're now forecasting COVID testing-related sales of around $1.3 billion, which is below our full-year forecast of around $1.5 billion that we provided in April. Exchange is expected to have an unfavorable impact of a little more than 1.5% on full-year reported sales. Our full-year adjusted earnings per share guidance of $4.30 to $4.50 remains unchanged, but reflects a lower earnings contribution from COVID testing sales compared to expectations in April, offset by raising our underlying base business earnings forecast by approximately 5 cents. For the third quarter, we forecast adjusted earnings per share to be approximately $1.10, which reflects strong growth on the underlying base business. We forecast total underlying base business organic sales growth, excluding COVID testing sales, to be in the low double digits and exchange to have an unfavorable impact of a little more than 1% on our third quarter reported sales. TD Cowen analyst Josh Jennings inquired, Robert, what are the drivers of the back half momentum in 23 and how sustainable is this momentum in 24? Robert Ford replied, yes, Josh, it was a very strong quarter with broad-based growth. We anticipated this when COVID began, as we saw a great opportunity for us. We saw strong growth across all four sectors, excluding COVID testing, and saw acceleration from Q1 to Q2 growth versus Q2 of last year. Devices and diagnostics saw a nice step up due to market conditions and new product launches. EPD sustained high single-digit to low double-digit growth, and nutrition saw double-digit growth. We saw recovery in the pediatric business and market share. Gross margin is a focus, with 3 out of 4 major businesses showing improved profiles versus the end of last year. We're well set up for the second half of this year and into 2024. Wells Fargo Securities analyst Larry Beagleson inquired, what are your thoughts on the Medtech Fab 5 in the pipeline, specifically Avere and the dual-chamber approval and TriClip, and the sustainability of the 11% cardio-neuroma growth? Robert Ford replied, sure. Our products performed well in the quarter, growing 40%. Annualizing the Q2 run rate, it's a little over $650 million. On the Aver side, we received FDA approval for the single chamber last year and have captured about a third of that market. With the approval for the dual chamber, which makes up 80% of the $3 billion worldwide pace market, we have the first ever technology with two implanted devices communicating. We're focusing on creating strong clinical results, training, and opening new centers. Amulet grew 25% this quarter and we're focusing on generating great real-world clinical results. TAVR with Navitor has roughly doubled in the last 18 months and we're hearing good feedback from implanters. TriClip is seeing strong international performance and we submitted it to the FDA earlier this year. We're enthusiastic about the opportunity in the US and the cardio-neuro business is in the early innings with a lot of momentum and sustainability. UBS analyst Danielle Andolfi inquired, "What are your expectations for Libre and Mitra clip in the coming quarters?" Robert Ford replied, "Thanks, Danielle. We had a strong quarter for Libre, with 30% growth in the US and 22% internationally. We've put behind us some of the upgrading activities from the second half of last year, and we've seen great success in France, where we have a 70% market share. We're well positioned in the top 5 markets, with US, Japan, and France reimbursing for basal. We have exciting launch activity and pipeline activity in the second half of this year, including integration with pumps, a 15-day sensor in the US, and a glucose ketone dual sensor trial in Q4. We're also converting our entire Libre 2 base to streaming through an app update. Mitra Clip had 10% growth in the US and 20% internationally, and we're focusing on restarting the referral process from cardiologists to hospitals in the US to reignite growth." Evercore IC analyst Vijay Kumar inquired, "Robert, what impact do you expect Lingo's launch to have on organic growth in fiscal 24? What are the implications of the $1 billion inflation impact on gross margins for the back half of the year?" Robert Ford replied, "I'll take the Lingo question. We launched the Lingo platform to expand beyond diabetes and capitalize on AI for personalization. We created a dedicated team of scientists, engineers, data experts, and marketers to develop a product targeting healthy populations. The product, Lingo Coach, teaches users about glucose spikes, how their body reacts to food, sleep, and exercise, and assigns a daily target to minimize spikes. It's a subscription-based model, direct-to-consumer, with pricing in line with our cash pay price for Libre. We launched in the UK yesterday and plan to file in the US at the end of the year. We don't expect a big financial contribution early on, but anticipate it to be a significant contributor over time." Bob Funk replied, "VJ, regarding gross margin, we guided a 56% profile for the full year back in January. Through the first half of the year, the base business is in line with that. However, lower volumes of COVID tests have resulted in lower gross margins. We expect to see gross margins of roughly 56% for the remainder of the year. We have teams dedicated to gross margin improvement and anticipate steady improvement into 2024. Citi analyst Joanne Wunsch inquired, "Can you provide insight into the 17% growth rate of electrophysiology? How much of that is in the US and how much is OUS? What do you think is driving that growth? Additionally, have you reclaimed 75% of the pediatric nutritional business? Do you anticipate reaching 100%, or is this where you expect a plateau?" Robert Ford replied, "EP growth was strong this quarter, with total growth of 17%. US growth was high single digits, around 9%, and international growth was 24%, with 8 to 9 points of that attributed to China recovery. Outside of China, international growth was 15%. Europe was up just under 20%, and the big 5 countries in Europe did particularly well. The US was likely impacted by the capital cycle, as EnSight X was launched last year and there was a large bolus of upgrades and capital placements. The consumable part of the US growth was in the mid-teens. We expect to see this growth continuing throughout the year." Citi analyst Joanne Wunsch inquired, "What is the 75% recovery rate for nutrition the best case?" Robert Ford replied, "I'm confident that we will reach our goal of regaining our pre-recall market share by the end of the year. We have already seen success in the WIC segment, where we have returned to our leadership position. We have also seen success in certain SKU sets and formulas, where we have already returned to our pre-recall market share. Our manufacturing process was restarted in July for specialty and August and September for non-specialty, which has provided us with the necessary supply to fulfill the demand. We are continuing to focus on this goal and I am confident that we will reach it." DIG analyst Marie Thibault inquired, "What investments and trends in diagnostics testing should we be paying attention to now that COVID testing is behind us?" Robert Ford replied, "We had a strong recovery in our diagnostic business, with routine testing returning in the US, Europe, Asia, excluding China, and Latin America. We are focused on striking a balance between top-line growth and gross margin expansion. Blood banks have recovered nicely, and we are investing in R&D to develop new assays to close any gaps in our menu. We are also investing in molecular and point-of-care assays, with a particular focus on a rapid test for traumatic brain injury. This test has been approved on a plasma sample and we are working to get it approved on a whole blood sample. This test has the potential to have a wide range of applications. Barclays analyst Matt Miksic inquired, could you provide an update on the timeline for filing and launching Libre 3, Lingo, and ketones, and what the path forward looks like for ketones in the core CGM? Robert Ford replied, the Lingo product launched yesterday is a glucose-only component. We debated this and wanted to start off simple. We have the opportunity to add ketones to it, and we'll be learning a lot about the healthy population. We have a pipeline of different analytes that will come into this, including lactate. There's an interesting application for lactate in both the consumer and institutional markets. We'll be adding on different analytes as we go, and there's potential for ketones in the diabetes space, as well as a non-diabetes population. Barclays analyst Matt Miksic inquired, what progress has been made with the IVL program since the acquisition of CSI and when can we expect to hear more about it? Robert Ford replied, the CSI closed this quarter and will have a strong impact on our vascular business. We've been adding to our portfolio organically with our below-the-knee stent in trial and through inorganic moves. We're particularly excited about the IVL product and it's getting a lot of attention and resources as part of the integration process. I'm not prepared to comment further on it right now, but it's high on my priority list. Raymond James analyst Jason Bedford inquired, could you please provide an update on the improvement in base business operating margin and the inflationary impacts on gross margin? Are you seeing input costs start to come down, and if so, when will that impact the P&L? Robert Ford replied, in response to the question about our operating margin profile, I'm pleased to report that we are back to our pre-pandemic operating margin profile. We have made investments during COVID to drive top-line growth, and we have seen leverage in our P&L due to those investments. Our infant formula business has contributed to the recovery of our share in manufacturing. Additionally, our device business has grown disproportionately, which has a higher gross margin profile. We are also seeing input costs come down, which presents an opportunity to improve our gross margins. We have also taken steps to ensure we have the inventory needed to capitalize on our top-line opportunities. All of these factors have contributed to our double-digit organic sales growth and our EPS guidance, which is now 15 cents higher than our original guidance. Mike Comilla replied, thank you for your questions. This concludes Abbott's conference call. A replay of this call will be available on Abbott's investor relations website at abbottinvestor.com after 11 a.m. Central Time today. We appreciate your participation.